You know, as part of my job, I pay a lot of attention to what's going on in the real estate market. I'm looking for information, valid information, all of the time. And so I come across a lot of commentary. And everywhere I'm looking lately, on YouTube, in newsletters, etc., I'm finding really bleak outlook about how the crash has arrived, how sales are plummeting, how dollar prices on properties are going down, how there's too much new construction that's going to flood the market with inventory. And I'm sure you're seeing these things as well. It's a little bit disconcerting. But is it in any way real? Well, let's dive into some real numbers. Let's dive into what's actually been taking place in the real estate market, and we'll be able to answer that information and gain some valuable insight that puts you into a better position than some of your competition. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. We help people make great property investments. All right, so this is the February 2022 real estate market update for the Las Vegas Valley. And in this market update, we look at single-family residential resales. There's another parallel series where I look at condos and townhome resales. This particular video, single-family, is the exclusive focus. Now, remember, we only look at resales, so I parcel out that data, which was new construction that some developers decided to put into the multiple listing service. So let's dive right into the numbers. And these numbers are current as of the data that exists on February 8th. So this is the morning that I pulled the data, but the data are through the end of January. The reason I wait an extra week is because not all data updates immediately in the multiple listing service, and so this gives time for data to propagate through the system. All right, price. The median sale price at the end of January 2022, $430,000. That's up. It's up 1.2% from the $425,000 at the end of 2021, the end of December 2021. It's up 26.5% or $90,000 from the $340,000 that we saw in January of 2021. So from $340,000 up to $430,000, $90,000 increase during the past 12 months. Now, that seems pretty strong. There's another way we can look at pricing. This other way I look at sometimes, frequent viewers know that I look at this other number because it gives us some indication of the internals of the pricing in the market. And that is price per foot. And while price per foot is not indicative of what any particular house should trade at, it does tell us whether the mix is skewing higher or lower from sort of the median. So $235 per foot at the end of January 2022, that's up 1.7% from the $231 at the end of December of 2021. It's up from the $184 at the end of January last year, 2021, it's up 27.7%. So we compare sort of the increase year over year in this instance on price per foot to the median home price. So price per foot, we're up 27.7%. Median home price, we're up 26.5%. So we've skewed a little bit higher over the course of the year on price per foot relative to median home sales price. And that suggests that the mix of properties is skewing a little bit more toward the high end. And that's pulling up the price per foot median a little bit more quickly than the actual median sales price on a nominal basis. Now, it's not a dramatic difference, but there's a little bit of skewing here. We actually saw more on some of the months in 2021, and so this has actually come back down a little bit and is tracking a little bit more closely to the middle of the market. So that's pricing. And pricing is significant. It's certainly not showing any kind of a crash. It's up. It's up month over month. It's up year over year. It's up strongly. But what about number of units sold? Because remember, price can be pushed higher because of demand dynamics or because of supply dynamics. If there is a lot of demand, then buyers push prices higher in competition to secure their particular home in the marketplace. On the other hand, if supply has just sort of collapsed, those buyers who remain in the market have few options and they're desperate and they may push prices higher just to be able to get into something before there's no inventory. Well, what's going on in the market? The numbers of sold pendings on the market, etc., as we go through the remainder of the video, like every month, give us insight into whether or not these are demand-created issues and or supply-created issues. And so let's go ahead and look at the number of units sold. Now, the number of houses sold in January of 2022, 2,446. Remember, single-family residential resale. Now, that number is down. It's down a lot, down shockingly. It's down 20.3% from 3,070 single-family resale residential in December of 2021. Now, is that a problem? Not really. Not really, for a couple of reasons. Remember, we had foreseen this issue arising because it arises every year. December is a time where fewer contracts are written, and therefore January is, generally speaking, the weakest month of the year in terms of homes being actually closed, the for sale taking place and closing. So where were we in pending home sales at the end of December? We're at 2,577. So that means all but 131 in practical numbers. All but 131, or all but 5.1% of those that were written in December closed in January. So there's a small amount of attrition. As we get to the back on market number, the back on market number actually is considerably higher than that in terms of percentage. But what this means is we didn't see a big drop off from what we would have expected in January. January is seasonally slow. That's because pendings are seasonally slow in December, and we closed properties at a very decent rate, 95% of the rate that we had for pendings from December. Now, I'll also comment, December of 2021 was the second strongest December ever. And so that was a very strong month, and it meant that pendings in December were a bit higher than we might actually have expected. And that set us up for a January that's actually really strong. So yeah, we were down considerably from the very high level in December, down 20.3%. But this is actually the fourth highest January ever in terms of single-family resales in the Las Vegas Valley. And the years that were stronger, January 2010, January 2012, those were both at the bottom of the pricing cycle from the housing collapse that took place in the Las Vegas Valley from 2006 through 2012. And the only other exception is January last year, January of 2021, when sales were approximately 50 houses higher than they were in January of 2022. So in fact, sales in January of 2021 were 2,496, so literally 50 houses more than what sold in January of 2022. And of course, 2021 in the aggregate, the greatest volume of single-family home sales ever in the history of the Las Vegas Valley took place last year. So very strong January last year. We're down 50 units from where we were January of last year. And we've got very strong home sales this year. All right. So what about pendings? Because that suggests something about the strength of the market looking forward, right? The numbers actually from this point stop telling us so much about what happened in January and start telling us about what's going to happen in the following months. Pending home sales, those are the contracts that have been written to purchase a home that have not yet closed. So they oftentimes, most of the times, become sales in the next month. So looking forward to kind of the implication of what will happen in February. Pendings in January of 2022, 2,870 single-family homes went into contract. That's up. It's up 18.1% from the pendings that we saw last month, which, again, we note pendings are always low in December. So not surprising that we would be high there. But we are down slightly, down 1.8% from the 29-24 pendings that we saw in January of 2021. So those numbers indicate demand. Demand remains really strong. With record high prices, pending home sales are down very marginally, 1.8%, and solds are down 2% from where they were at the beginning of 2021. And remember, 2021 became a record year in terms of volume. Well over 37,000 single-family resales took place in the Las Vegas Valley last year, an absolute record for any year and any rolling 12-month period of time. Very strong unit growth last year as well as pricing growth. Well, this year, we're just slightly below that trend in terms of unit growth. And of course, we still have record high pricing. Well, what about the supply side? I'm Justin Miller with the Chong Miller Group. I produce these videos to put valuable real estate information into the public domain. If you find these videos to be interesting, helpful, or have usable content, please subscribe to our YouTube channel. And as they say in the YouTube universe, please smash the like button. That way I'll know to continue to produce videos like this. Thank you. And now back to our show. What about inventory? Because inventory can also induce price increases. Well, we do have inventory constraints. We had inventory constraints all of last year, even though we were able to get product coming into the market and sold very quickly such that we sustained very high volumes of sales. We did have very low levels of standing inventory. So how do we compare? Well, 2,395 single-family resale houses for sale at the end of January. It's down, as we might expect a little bit of this seasonally from December. It's down 19.9% from 2,991. That's actually a really big decrease in inventory. That suggests that actually we're a little bit inventory constrained in this market, and we could have sustained higher home sales and higher pending sales if we'd actually had more houses for sale in the market. This is down 41.6% from the 4,100 that we ended January 2021 with. Now, this is a really big problem. January 2021 put us into acutely low levels of inventory throughout the entirety, but especially the first half of 2021. And we're running well below 41.5% below where we were at this time last year in terms of standing inventory. This is going to be a very real challenge this year. We have demand, clearly, is shown in closings and pendings, but we have real supply constraints that exist in the market at this time. And I'll give you an anecdote about it, actually. So as I record this, it's Tuesday morning. Literally this past Friday, I was doing some research for a client. We were going to go out to look at properties on Saturday. On Friday, I picked 10 properties. Now, I don't normally show 10 properties to a client in a day, But I picked 10 properties because there were a few of them I wasn't sure if they were going to appeal to them, and I wanted to talk to them about it. And so talked to them, got some additional information, and on Saturday morning, as I was going through scheduling our showings and our route, 5 of the 10 that I had looked at on Friday had just gone into contract overnight. Now, of the 5 that we then got to actually see on Saturday, 3 of them went into contract by the end of the day on Saturday. 1 with 6 offers, 1 with 3 offers, and 1 with just a single offer. So there were only 2 that remained of that 10 that were available to purchase as the weekend ended and we got into Monday. There is inventory out there. There's some of it sits on the market for a long time because it's got problems or because it's not priced in any way correctly. But a lot of stuff is coming into market and going right away. 2 of the houses, 2 of the 10 went into contract the first day they were on the market. And I tell you that anecdote because that literally just happened to me and my client this past weekend. It's not a problem, except that there's a lot of people searching for houses and there's not that many houses. And so you've got to be assertive in this market. All right. So standing inventory is down from where we were last year that put us in crisis levels. We're down 41.6%. We're going into crisis low inventory levels probably through at least May, maybe through the entirety of the first half of this year. We're going to have real big inventory challenges that will be pushing prices higher in addition to demand side push. Now, we get new inventory into the market through new listings. How do new listings look? Fortunately, they look a little bit better. 2,835 new into market in January of 2022. That's up. It's up 29.2% from the 2,195 new into market that we saw in December. But that's normal. This is a seasonally normal pattern. It's up, fortunately, but it's up just marginally from the 2,826 new houses into the market, not meaning new construction, but rather new listings into the market in January 2021. It's up 0.3%. So we've got home sales that are running strong, down 2% from where they were a year prior. We've got pendings, which are strong, down 1.8% from where they were a year prior. We've got inventory, which is weak, down 41.6% from where it was a year prior, and new listings that are marginally strong, up 0.3% from where they were last year. Folks, there's nothing crashing in this market. Inventory levels definitely are going down. If you're hearing other people say the market's being flooded with new inventory, I don't know what they're smoking. If you hear there's too much new construction, these people are out of their minds. That's not in any way a valid statement about what's going on in the residential real estate market here in the Las Vegas Valley. It's just simply not. Home sales, very strong, very stable. Median sale price, record high, by the way, on a per foot basis as well. Now, what about back on market? There's a number of reasons properties that go into contract fall out and go back onto the market. That number still elevated, 952 in January of 2022. That's still elevated from normal, not from last year, but from normal, what we might see, by 25 to 33%, depending on the particular month that we happen to look at the back on market numbers. Last year at this time, back on market was considerably higher, being driven largely, not entirely, but largely by appraisal issues. So I am Justin Miller with the Chong Miller Group, and we help people buy and sell homes. And if you are a seller, you can definitely sell your home in this market. This market's really strong. You'll be able to get a good price. But appraisal problems are real, and if you have an agent who doesn't know what they're doing, you can find yourself back on market, back on market, back on market because of appraisal problems. You need to have somebody who actually knows what they're doing. We also still see some inventory sitting in the market for as long as a year in this very tight inventory market because agents are not necessarily prepping a home for sale, doing all the things that need to be done to get that home sold. Hire an agent who really understands what they're doing. And we at the Chong Miller Group are really good at helping our clients sell their properties. We take care of their properties. We help staging their properties. We help cleaning their properties to make sure they show exactly right. And we market properties so that you have exposure to the broadest pool of buyers possible. We also price your property right. If you're priced too low, it's a problem. If you're priced too high, it's a problem. You need to be priced right even in this market because buyers they're not making great big mistakes on the pricing side. They know what's going on and they want to get into a house, but they also know what they can and cannot afford. If you're a buyer, please also reach out to us. We help buyers buy houses in the Las Vegas Valley all the time. We're very successful at it. We're successful at competing our clients' offers into contract. We're successful at helping to ensure that the contracts are strong and stable so they don't fail because of the different problems that may arise as one goes through a contract. Please make sure you have an agent representing you. And please, we would love to talk to you. Consider us, meet with us, and find out if we're the right agent to represent you, whether you're a buyer or a seller or an investor in this market. There are some great investment opportunities. I hope to do a video actually within the next couple of weeks about how to think of both a primary residence as well as a secondary or more traditional investment home as really consequential investments into your portfolio. All right, so I'm Justin Miller with the Chong Miller Group. Look forward to talking with you soon. We'll see you in the next video.